Welcome to Coach Soto Unplugged with your host, Mark Coach Soto.
All right, ladies and gentlemen, thank you so much for coming into our podcast this morning, Coach Soto Unplugged. And we are so excited about our guest today, Mr. Dana Samuelson. Dana, welcome. Welcome to our podcast.
Hi, Mark. Thanks for having me. It's great to see you again.
Guys, we're going to be giving you an education about precious metals, gold, silver. Dana is one of the leaders in the nation when it comes to this, learning about this and the sales of this amazing commodity. But before I begin, I want you guys to know I got to do a disclaimer. I just got to do it. Nothing in this podcast should be considered investor advice. It's just two friends talking about their experience with precious metals, and we want to talk about what we see happening in the precious metal world. Dana is considered a leader in this world, and any investment advice you make based on this podcast, you do so at your own risk. So please make your own personal decisions. Hopefully I covered that right, Dana. Now let me tell you a little bit about Dana. Dana has been active in the precious metals market for 45 plus years and has become a true industry leader when it comes to this commodity. I'm going to let him tell a lot about his story because I really want you to get an education about Dana, how he got into this, what got him started, because I remember when I was first met him, I was just captivated by him. Dana is also the president and owner of American Gold Exchange, which is the leading national mail order company that specializes in precious metals and vintage pre-1993 U.S. gold coins. His company operates out of Austin, Texas, and he has an A+ Better Business Bureau rating and almost perfect Trustpilot customer reviews. The guy is the man. I've used his company. They're so fun to work with. American Gold Exchange is celebrating its 28th year in business with over $2 billion in sales. It might be much higher than that now, Dana, based on the last few months, and tens of thousands of satisfied clients, for which this man is one. So, Dana, thank you, buddy. Thank you again for joining this podcast, Unplugged. Tell us a little about your history, how you got started in this business 45 years ago. Let us know a little bit about you.
Well, thanks, Mark. So just to give you kind of the Cook's tour, I got out of college in 1980 with a German degree. During a period of time when we were going through something similar to the great financial crisis. We had record high inflation, high oil prices, interest rates were sky high, the economy was not doing well. And with a German degree, I was completely unhireable, like a lot of kids coming out of college in 2009. But I had a lucky break. My brother had gotten into the precious metals business 5 years earlier when he got out of college. And he was working for a company in Houston, Texas at the time that was the biggest regional buyer of physical silver at the time. And that was during the first real precious metals boom of the late 70s, when silver hit $50 an ounce and gold hit $850 an ounce after being, $3 an ounce for silver and $40 an ounce for silver 10 years earlier. So I got hired to work in the vault, counting, shipping, and weighing the physical product because I could be trusted. It's kind of like going to work in a restaurant right at the kitchen sink, washing the dishes. Yeah. So I've had a very organic career. I've learned from the bottom up. I got my real lucky break a couple of years later in 1983. Early in 1983, Jim Blanchard, who was the man that was responsible for the private re-legalization of gold ownership in 1974, had the biggest mail order coin company in the country in the late 70s and early 80s. He hired me to be a vintage coin appraiser trainee. So I went to work for Jim, and I literally sat in a room for 2 years, and all I did was look at vintage U.S. gold and silver coins and learn how to judge their quality or their condition, surviving condition today. Mm-hmm. And when the trader would go to coin shows, I'd go up to the trading desk and was a substitute trader. Well, a couple years later, I was Jim's senior buyer, and I got to spend 50 million bucks of Jim's money with the industry in the mid to late 80s. And I got to know all the players as a result, and went on my own for a couple of years, and finally got enough courage just to start my own company in 1998. And it was the best decision I've ever made.
Wow.
We've got a small boutique shop, not a shop per se, but a private office in Austin, Texas. We're a small company, but we do a large volume of business because we treat people like we want to be treated. We're transparent, straightforward. I like to think we're honest as we can be, and we just try and help people in this sphere with good advice, good market information, very competitive pricing on the most widely traded, competitively priced, and most importantly for our clients, easily sellable bullion products. And over the course of the last 28 years, I'm a member of the Professional Numismatists Guild, which is the leading organization of rare coin dealers.
You know, Dana, I saw that word on your bio, and I was like, I don't even want to try to say that.
Numismatist. It just means someone who studies coins. But I was a president of the P&G in 2016 and 2017. I served on their board for 12 years. And I've also become an expert witness for the government in a couple of allegedly predatory pricing cases with precious metals dealers. You know, we're an unregulated business. Anybody can be a dealer tomorrow, and we do have opportunists that come into our space when we get into a good market like we're in now. And you know, if you don't know the difference between a reliable operator and an opportunistic operator, you can get taken advantage of. And I've always thought that was just the wrong thing to do. You know, our clients are our best asset. Without them, we wouldn't have a business. If we don't treat people well, what do you have? Nothing. God. Really? Right?
Yeah, no doubt about it, Dana. I mean, like I said, I've used you for gold and silver, and your organization is just top notch. They're educational. They teach you if you have a question. It's really been a joy to work with you. Let's talk a little bit about precious metals, because a lot of people hear about precious metals, gold, silver. There's other things that would qualify as precious metals. But you know, typically when people think of that, they think of gold and silver. And you know, let's talk a little bit about that, because you talked about when you got involved with it being in the, you know, the $3 range. Now you're seeing silver and gold, you know, or gold up in the thousands, and silver, you know, nearing, is it above 250 now? Where's it at now?
No, not even close. We're at about $75 an ounce right now.
That's it. I get them confused, buddy. I get them confused, but I'm sorry about that. But I know that we saw a huge jump. Maybe tell us a little bit more, educate us. Hey, we're all ground level here, right? Just give us an idea of what is happening with gold and silver, because like I said, everybody's hearing about it right now. What is going on with gold and silver, and what is causing these fluctuations to happen right now?
All right.
You'll hear that occasionally, buddy.
Oh, old Matthew. He's a Texan too.
Yes.
So, gold and silver are man's oldest form of currency and money. And they're two different things. Money is something that has value, and currency is a medium of exchange. And for most of man's history, gold and silver have been both currency and money. But we took the gold out of the currency in the U.S. in the 30s, and now we've taken the silver out of the currency in the 60s here in the U.S. So we have what we call now a fiat-backed monetary system, which is a paper monetary system that's not backed by anything but the full faith and credit, you know, of the U.S. government. For, you know, centuries, you know, gold had a trading value that was pegged. So all the gold coins that were minted in the world from the 1600s all the way to the 1930s were pretty much fixed at a price. And that was our currency. After World War II, we went to, the dollar would be backed by gold. We would never print more gold than we had ounces. We would never print more dollars, excuse me, than we had gold in Fort Knox. But of course, politicians like to make promises. And, in the late 60s, Lyndon Johnson made a few promises with Social Security and Medicare and the great society programs. We had the Vietnam War. We went to the moon. These are expensive things. And we printed more dollars than we had gold to back them in Fort Knox. So we took the dollar off of the gold peg. And since then, we've seen debt just continue to, accumulate globally. And it's really just accumulated, quite aggressively since 2000. So we don't really have a precious metals culture in the United States like most other countries have, because the dollar is the world's reserve currency, and it has been the world's reserve currency since the end of World War II, where the rest of the world uses dollars, and it helps to support our debt and our treasury market. But if you've had war on your shores, or if you've seen your currency collapse due to mismanagement by politicians, then you have a precious metals culture. Now, I mentioned my brother earlier today. He got his start in 1975, and the first job he had was going to a Vietnamese relocation camp in Arkansas. The people that were fleeing the Vietnam War and relocating to the U.S. literally had gold bars sewn into their clothing. That's how they left Vietnam with their wealth.
Wow.
Because gold is really portable wealth. That's really what it is. It's portable, compact, transferable wealth. And his job in 1975 was to buy that gold from those Vietnamese refugees and give them dollars so they could get started in the U.S. But again, we've never had war on our shores. We're insulated by two oceans. And our currency is the world's reserve currency. It hasn't failed. But our debt just keeps going higher and higher. And that's really kind of the root of what's driving the gold price higher in dollars. It's not so much that the gold price is going up, it's that the purchasing power of the dollar is going down.
Yeah.
Right. And we've had a couple of episodes this century, the 21st century, where we've seen the great financial crisis when the banking system almost came apart at the seams. Gold tends to climb a wall of worry because it is the currency of last resort. So between 2008 and 2011, the gold price went from $800 to $1,900 an ounce when it looked like we could have the banking system come apart at the seams, right? And silver went from about $15 an ounce to $49 an ounce during that run. Then the world's economies gained traction. 2013, 14, 15, we still had zero interest rates for a period of time there. The gold and silver price came down because there was less to worry about as the economies of the world kind of regained traction. Then what happened? Well, COVID hit, right? So we go through excessive government spending. They're printing money out of thin air, which dilutes the purchasing power of the dollar. Gold moved back to $2,000 an ounce. We went sideways for a couple of years, and then what happened? Russia invaded the Ukraine, and we weaponized the dollar. Now we're penalizing people that have dollar reserves, like Russia, and we kick them off of the SWIFT international bank payment transfer system. And a lot of the countries that are in the global south, the BRICS nations said, well, if they did it to Russia, they could do it to us. And that's really kind of been the driver of this bigger gold run that we've seen in the last couple of years, when gold has moved from $2,100 an ounce to as high as $5,600 an ounce just a month or two ago. Now we're about $4,000 to $800 an ounce today. Is the fact that some of these countries around the world were like, if we have dollars or if we have treasuries, well, they could take them from us or prevent us from using them. So we want to have something that we can use that's safe, that the world understands and respects. And gold has really filled that role better than anything else. And that's why we've seen a big run in the gold price. There's been a lot of physical demand for gold over the last 4 years in particular, since we weaponized the dollar. And then you have President Trump comes into office, and he's created a lot of global uncertainty with tariffs. They're on, they're off, they're higher, they're lower. Um, he's been a little erratic on how he's deployed them. And if you do something he doesn't like, well, you might just find yourself tariffed. And that's really, I think, what helped to drive the markets pretty substantially last year was all the tariff uncertainty. Because again, gold and silver tend to climb a wall of worry when things are not sure what's going to happen next. Of course, we've had Iran and Israel attacking each other too. So you've got two wars, you've got growing debt, weaponization of the dollar, and then a lot of global economic uncertainty, and now kind of a bifurcation of us versus them with China, right? It's becoming kind of what was a covert war or a Cold War, as I just went to a conference with Jeff Snyder of Eurodollar University, and he says with the phase that we're in right now is kind of like a Cold War between the U.S. and China. I don't know if many of your people remember the Cold War against Russia before the Soviet Union fell, right?
Yeah,
it's kind of the situation we're getting into. And this is a recipe for higher precious metals prices because of the uncertainty and some of the instability in the global geopolitical situation. And then, of course, the debt just keeps going higher and higher. We had $7 trillion of debt in 2005. We had 17 in 2015. Now we've got $38 trillion of debt. And, in the last 20 years, our debt has doubled twice. Is it going to be 70 trillion in 2036? Who knows, right?
Yeah.
So this is more of a global response to debt, uncertainty, geopolitical strife. It's not so U.S. centric right now because we're still the best economy in the world with the best currency. But if we go into an economic downturn, and there's a stimulation of the economy through lower interest rates or more money printing, that's a recipe for higher gold and silver prices. So that's kind of the bigger picture of what's been happening.
Amazing. That was amazing to hear you, just give us an education on that. When you see what's going on with China and America and all that, how much of that really plays into the growth of gold? I mean, you mentioned all the other stuff, but it always seems you're hearing about China, right? Is that a big play when it comes to this, Dana?
Oh, absolutely. Like I said, we don't have a precious metals culture in our country, but Japan has a big precious metals culture, gold, right? China does too. Who else does? India. So you've got the two largest populations in the world like precious metals, and Europe has a precious metals culture. Again, as I said, if you've been in these countries and you've had your currency fail, well, gold is a good thing to own because gold insulates you and gives you purchasing power when your paper money does not. And what's really kind of driving this whole equation more than most people realize is, gold used to be money. That was the currency we used going into the 30s. And then we got into World War II and gold currency stopped to exist as a currency. We took it out of our currency in 1933 and went to paper money. Then the war happened. And then we went to the dollars, the world's reserve currency. Well, a lot of the countries that had gold coins for currency took them back in the 30s. And these countries, and particularly in Europe, had piles of gold in their vaults. Britain, France, Norway, Sweden, Austria. A lot of those central banks that had those gold coins were sellers of that gold from 1950 to 2010 because they didn't think they needed it, right? The economies of the world are doing pretty well. The dollar is the world's reserve currency. After the great financial crisis, central banks said, you know what? If they can print money out of thin air like that, what happens if we're trading with another country and their currency goes bad on us or their treasuries that we hold go bad on us? We need a little gold as a hedge against uncertainty. So central banks started buying gold in 2011. And between 2011 and 2021, on average, they're buying 500 tons of gold a year, which is about 1/5 to 1/6 of what the mines produce every year. But after we weaponized the dollar the last 4 years, central bank gold buying has averaged a little over 1,000 tons a year, which is about a third of what the mines produce. So following the weaponization of the dollar, they've ramped their gold buying up, which
Mm.
has been material and affecting the price cumulatively. And now you've got this kind of, Trump tariff uncertainty and this Cold War that we're getting into. And, it's just creating more desirability for precious metals around the world, but not so much in the US because we don't have that culture. Like I said, we're insulated from war by two oceans, and our currency is still the world's best currency. So
Mhm.
most Americans don't understand why the rest of the world has gone on a gold and silver buying spree,
Yeah.
especially over the last year to 2 years in particular. But they
Dana,
have, and that's what's driven the price.
it's amazing to see and follow. Let me ask you this: where do we get our gold? Where does it? I mean, who's the country out there that is? I mean, here we are in El Dorado Hills, right? And we see gold panning and all that type of stuff. We're always hearing about gold living here in Northern California. Where do we get our gold? Does it still come out of this area or what?
Well, gold is found in the ground all over the world,
Hmm.
right? But mining of gold is a nasty, ecologically unfriendly, dirty business. So we don't have much mining
Hmm.
in our country per se. A lot of gold comes out of South Africa, uh, comes out of Canada. Silver, there's a lot of silver in Mexico and Peru and Central America.
Hmm.
China has a lot of gold in the ground. So we mine it. We had huge gold discoveries in 1849 in California, which
Hmm.
led to the great, California gold rush,
Yeah, yeah.
which kind of rewrote the American history. So, but we like in recent times, we don't have a lot of mining in the US. So, I mean, it comes out of the ground first and foremost. And
Hmm.
most of the gold that's ever been mined survives. It's used in industry to a small degree, but most of the gold that's ever come out of the ground is either in bar form or coin form or jewelry
Right.
form
Yeah.
today. There's not that much attrition,
Mm.
but the amount of people that want to buy it, and more importantly, the paper money that exists to buy it, keeps growing bigger and bigger and bigger at a faster rate than we get it out of the ground. So
Hmm.
that's really what helps to drive the price higher. You have a bigger pool of buyers for a smaller pool of availability over time. If
Yeah.
you go back, over 20, 25 years, gold price appreciation has averaged about 7 or 8% annually. Now it's lumpy. It can go up 20% one year and go down 5% the next year. But over time, gold is a good store of value and a hedge against inflation and the
Hmm.
dilution of uh, the currency purchasing power through the printing of more and more dollars or yen or euros or whatever your currency is.
I'm relatively new to the gold and the precious metal industry. I started investing in it in 2017. It was a friend of mine that came to me and just said, "Hey, Mark, what do you guys look like when it comes to gold and silver?" And I was like, nothing, right? I have an IRA, right? But I have a 401k. But he's the one that, and he's an air conditioning guy, right? And he's the one that said, "Mark, you need to really start looking at this." So I started getting a brief education on it, and I started buying. And now I look at it and I go, God, Dana, what an amazing investment that has turned out to be, right? I'm nowhere near like these big guys out there, but it's to see it grow the way it's grown, right? It's become a nice little thing for me and my wife as it when it comes to a savings for us, right? We have no plans on ever selling it, but it's a good savings, right? So here I am, Joe Schmo. I want to get started. What's the best way to do that?
Well, you want to understand what you're doing.
Yeah.
First and foremost, gold is really a good savings vehicle,
Mm.
and it's a good insurance policy for the rest of your money. Now, we had an extraordinary year last year where the price appreciation in fiat currency was extreme. That's unusual. Like I said, on average, you get 6, 8, 9% a year, depending upon the year. Um, but if you want to own physical gold, I mean, that's what my company specializes in. We handle the physical products. And most people, when you think of precious metals, you think about a bar, a bar of gold. But that's what refineries make. So the refineries in Switzerland and in Japan and in Canada, they take the raw metal, they purify it, and they put it into bar form. But what we also have in this world today are sovereign minted 1 ounce gold coins. They're really just round bars made by the US Mint, the Canadian Mint, the Austrian Mint, the British Royal Mint. These are the four most popular mints. We recommend, if you're interested in owning physical metal, these are the better choices for you instead of just 1 ounce or 10-ounce bars of gold. And the reason is we have a modest but growing problem with Chinese counterfeits. The Chinese knock off everything, right?
Yeah.
They've been knocking off Gucci bags and Rolexes since the 80s.
Yeah.
Well, they started really going into the precious metals arena about 2015. Now, I mentioned that I was president of the P&G, the Professional Numismatists Guild. This problem came up when I was president, and I helped to conceive of and establish the Industry Anti-Counterfeiting Task Force that today works with Homeland Security and Secret Service to interdict spurious shipments of metal coming in from China. And what they really can fake better are the bars, because the bars are very plain looking. They take tungsten and they plate it with gold, and it can fool people. It can fool professionals. But if a true pro has testing equipment and can tell because there's something off, either the look is a little different than what we're used to looking at, or the dimensions of the bar are a little off. But these mints, the US Mint, the Canadian Mint, the Austrian Mint, the British Royal Mint, they've all defended the integrity of the product over the last 10 years by adding tiny, minute little design elements into the picture that's struck into the coin or the round bar. We call it a coin, but it's just a round bar that makes it harder for the Chinese to counterfeit. And that's been instrumental in helping to protect the integrity of the product, both within the dealer community and the public at large. Now, you may not be able to tell a fake Chinese, Canadian silver maple leaf from a real Canadian mint made one, but I can see it from a mile off because I look at this stuff all the time, which is why it's important that if you're going to be in the physical market, you do business with a reputable, long-standing dealer who knows what they're doing, not someone who's just popped up into the marketplace in the past year because the market's hot and it's an opportunistic chance for them. Or, pawn shops don't always have the expertise to understand what's real and what may not be real. So we do business directly with the mints themselves. So we buy from the trade and we sell to the public. We also buy from the public. We make a two-way market. But in the physical products, there's a bit wider buy and sell price because it's a physical product than you'll get with a stock or an ETF, because that's just paper you're trading, right, on a 0.5% buy-sell spread. So if you're going to invest in the physical precious metals, these are not really good trading vehicles because there's some friction to the transaction. An ounce of gold has about a 4% buy-sell spread in the dealer community, right? So if I sell you an ounce of gold and I buy it right back from you, you're going to lose 4%. That's the spread. So if you're going to...
So let's stop there. Is that what you mean, Dana? Is that when you go to buy, you hear the word spot?
Spot is the price of an ounce of gold in a contract on the futures exchange in New York, right? So that's the base price of an unfabricated ounce. So typically for an ounce of gold, we'll sell that for spot plus 4%, because the mints charge us, 2 or 3% just to make them, and we make 1 or 2%. But if you're going to sell it back to us, then we'll pay you the spot price. So that's the difference, right?
Got it.
Dealers, we have to have a little bit of margin for us to trade with each other if we need to.
Sure.
right? For cash flow and inventory control concerns. So the spread dealer to dealer is a little tighter than the spread is from the public to the dealer. And you understand, it's like,
Yes.
professional market makers, that trade huge blocks of stock will trade with each other a little tighter than they will with the public, right?
Hmm.
Same thing. And that's why there's a little bit of friction to the transaction. That's why if you're going to buy physical precious metals, you should do it with the intent that you're going to hold it for a period of time. So you
Hmm.
get a chance to, overcome that buy sell spread and let that, what has been a pretty steady, 7, 8, 9% annual appreciation work for you over time. And that's why it's a good way to save money and to save some money out of side of a depreciating fiat currency like the dollar, which, you know, when inflation's 2%, you don't really feel that, you're losing purchasing power. But when we go through an episode when inflation gets to 9%, or now over the last 4 years, cumulatively, it's more like 25%, you really feel that in the grocery store, right? You
Yeah.
know how much fewer groceries you get for that same $100 right now than you did 2 or 3 years ago. Well, gold will help you overcome that by holding its purchasing power over time, which is why it's a good savings account. But it's not something you want to just buy today, sell tomorrow, and trade if you're going to
Yeah.
own the physical market.
Right. Right. It's something that you want to hold on to. Now, when you mentioned about the counterfeit gold, does the same thing happen in silver?
Yes, it's more prevalent in 1 ounce gold coins just because of the valuation, but there's problems with silver as well.
Mm-hmm.
And even what the Chinese do with gold is they plate tungsten with gold,
Mm-hmm.
and in silver they're not even selling silver coins. I'm not even sure what the metal is that they're selling, but it's not silver, right?
Okay.
It's not even probably a small mix of silver. And again, that's why it's important that you do business with a reputable, long-standing dealer in the community who understands the integrity of the product.
Right.
Everything that we offer, we'll buy back, and we'll buy from, if you haven't bought from us as well. But we want to see it, inspect it, test it, make sure it's right before we'll lock the price in. Because if you've bought something that's spurious, we cannot resell that, right? We want to make sure that what we're getting is legitimate. As soon as I start selling a bad ounce, that's my reputation. It's
Yeah.
gone. And I
Sure.
can't have
Sure.
that ever.
Yeah. No,
So we're
makes sense.
very, very strict, and we do our due diligence on everything that comes into our place of business before we offer it back out.
Okay. So if I want to get started in buying gold and silver, I have some money aside. I want to invest some money, right? When it comes to what would you recommend? Or, once again, disclaimer, this is just an education podcast. But, you know, would you recommend starting with silver? Would you recommend, just putting your foot in the door and seeing what happens with silver? What kind of knowledge would you like to give us on that?
Well, there's the one thing that I think confuses people is the price is always changing,
Mm-hmm.
because it's just like a stock that, gold and silver trade on the futures exchange all day, every day,
Mm-hmm.
23 hours a day, 5.5 days a week. So the price is always moving, but the products we're selling, it's just like you're buying something from Amazon, except, every time you look, the price is going to be a little different. So there's the base price for the metal, and then there's the premium for manufacturing, distribution, and profit for the dealer. Right. So if you've never done business before, what you have to understand is you're going to lock in a price when you make a purchase at whatever the spot price is at that moment in time, plus whatever the premium is for that product. And the most popular in the US are US minted, Canadian minted, and Austrian minted products.
Mm-hmm.
If you've never owned any precious metals, the best way to do is to start small. Find the dealer you want to do business with, either go into their place of business, or you can order online or call, some companies like our company, and we'll talk you through what your, best choices might be. And it's best to, start small and get a familiarity with how the process goes, right? And What we do is we'll lock in a price with you over the phone. That's how we do it. And then we'll email you an invoice and then you can pay us. Now on smaller transactions, we'll give you credit, so to speak, on your transaction. If it's a larger transaction, we've never done business before, we're going to want some kind of good faith deposit to make sure that the transaction's good before we lock you in. Which protects us from you saying, you know what, I changed my mind, because we literally take that ounce out of our inventory and put it into yours, and we no longer manage that, right? So the price liability becomes yours, but go through the process. Get some in your hand. If you have some skin in the game, you pay attention to it. Right now, we've both met Robert Kiyosaki, right?
Yeah, yeah.
And I remember when Bitcoin came up, and mutual friends of ours, saw Robert going, what's this all about Bitcoin, right? And then next thing you know, he's on his phone and, I bought some Bitcoin. And they're like, what? You bought it? He goes, yeah, if I don't have some skin in the game, I won't pay attention to it. And the easiest way to get some skin in the game with precious metals is with silver, because it's a lot less expensive. It's a lot more affordable. You can get a little bit more in your hands physically than you can with an ounce of gold, which is, $4,800 an ounce right now versus about $75 an ounce for an ounce of silver right now. So, get some familiarity, understand how the process goes. And then if you feel like it's right for you and you want to increase your position, then you know how to do it and perhaps who to do it with. And it's good to have a relationship with a dealer, just like you want to have a relationship with your stockbroker or your doctor, right? When things get fast and furious like they have been this past year, people that we have a working relationship with, if they call us and say they want to spend, some real money, if we have that relationship with them, we'll take their transaction over the phone and trust them for it, right? Yeah. But if you're new, you've got to establish some credibility with us, just like you want us to establish credibility with you.
Yes.
Especially when the price gets volatile,
Yeah.
Show me the money.
Show me the money. Yeah, no. I remember my first time buying with you, and I was telling my buddy that introduced me to this, back in 2017. I said, and he's mailing it to me, and he looked at me and goes, "You're not going to physically look at it?" And I go, "Well, I looked at it online, but he's mailing it to me." And he couldn't believe it. He was like, you're going to trust that? You're going to, and I said, well, first of all, I trust Dana and I trust his company. And he came with high recommendations. And 2 days later, 3 days later, it comes arriving at my door. You sign for it. It really was that simple. And I remember my wife and I opening up the box like it was Christmas, right? And it was just so fun to do. And now seeing the way it's grown and doubled, right? It's a real fun thing to get involved with. It's a great investment opportunity. And I want to encourage people to really listen to this podcast, learn from Dana, and trust his company. His company, American Gold Exchange, they're wonderful people. Everybody there I've talked with, from Dana on down, they're educational. They don't teach you like you're some dummy. They work with you, right? And if you want to get your foot in the door into this precious metal world, I highly recommend them. Do you sell anything else but silver and gold? Do you do other type of commodities, Dana?
Well, the other two precious metals are platinum and palladium. Those are the four traditional precious metals: gold, silver, platinum, and palladium. Gold is a monetary metal. It's about 95% of its value comes from monetary uses, let's say, with about 5 to 10% commodity use. Silver is about 50-50 commodity and monetary metal. Platinum and palladium are much more commodity metals than monetary metals. And that means, their uses are primarily in catalytic converters in automobiles to help reduce emissions. They're good with that. Platinum and palladium are photovoltaic cells for silver, EVs. So the gold has a monetary value. Silver has a commodity value. Platinum and palladium have a lot more commodity value. So they're more economically tied to economic activity than gold, which is primarily, tied to, whether economies are doing well or not. Right.
Yeah, right.
And, as far as safety of economies, not vibrancy of economies, but safety of economies.
So you sell those other precious metals also?
Yeah. Yeah. But most of our business is gold and silver, 95% of it is, I like platinum and palladium. They're both scarcer than gold. They're both a lot cheaper than gold right now, but there's just not near as much demand for them.
Yeah. So when you see, I got to tell you, um, uh, social media is kind of crazy when it comes to this, but it's amazing. The last few weeks, I mean, 2 or 3 weeks ago, that's all you saw was gold, silver, gold, silver. It was all you saw, and now it's kind of lightened up, but it's pretty crazy what's going on with gold and silver. Where do you see it gold going, Dana?
Well, we've had a red hot market, where gold has gone from 3,000 a year ago to as high as 5,600 just a month ago. And now it's going through a corrective price phase. And silver just exploded from about $30 an ounce, broke a new all-time high at $52 an ounce to $121 an ounce on a real squeeze. And now it's settling into, around a $75 an ounce price range. We're in what I call a consolidation phase right now, where we've had a big run. Now there's some profit taking, kind of the heat has come out of the equation. All that hype is kind of, it's like steam is being let off right now. So I think in the short term, gold is going to trade probably between about $4,500 and $5,200 an ounce, which is a pretty wide range. Silver is trading right now around $75 an ounce, but it's only been over $50 an ounce for about 2 months now, which has been a 3-time previous high, right?
Crazy.
So it could give up a little bit still, but I think over time we'll see them move higher still. And here's something for your people to consider. What we've really seen in the last couple of years, and this goes back to kind of that Cold War analogy between the US and China, is kind of a grab for everything that we're going to need for natural resources, whether it's lithium for batteries, for cars, or silver for solar panels, right? Or some of the other copper for electricity. Tangible assets and minerals in particular have been underinvested by industry for years. So that's kind of why we're seeing a kind of a catch up right now in a lot of metals, not just gold and silver, but copper too, lithium. Silver is one of the most conductive metals there is for heat and temperature. I've got a 1-ounce silver maple leaf right here in my hand. It's on my desk all the time. Now, if I take this and hold it between my fingers, which you shouldn't do like that because you fingerprint it, and I hold an ice cube, just the temperature from my fingers is going to translate and transmit into that silver. I can cut an ice cube in about 7 seconds, just like that, because silver conducts heat so well.
I never knew. Rick, did you ever know that?
No, I didn't.
I never knew that.
So my iPhone has silver in it, right?
Yeah.
Samsung has come up with a battery for electric vehicles that can charge in 9 minutes and go 600 miles on a charge that's silver based, right? They announced it as a prototype a year and a half ago, but guess what they just did in the last 3 months? They took $175 million and invested it in a closed silver mine in Mexico to reopen it, to go directly to the source, to secure that supply line. And there's been news that the Chinese government went directly to 2 Canadian silver mines in December to try and buy silver in the ground for $8, $9 more per ounce in the ground than it's trading, refined above the ground at, to secure the supply lines of it because it's needed in industry. So the prospects for silver to continue to move higher in price over time are very good because, there's not a good substitute for it. Copper is the next best substitute for it, but not nearly as conductive as silver is. And if I've got, $20 worth of silver in my iPhone and the silver price goes from 75 to 150, and now the silver in my iPhone is $40, do you think that's going to slow down iPhone sales? No, right? So if you need it, you need it. And silver is just one of those metals you need for industry, for conductivity. And gold, there's no substitute for gold for true, portable, transferable wealth that the whole world understands, which is why central banks have been on a buying spree for gold since the great financial crisis and have doubled that since we weaponized the dollar, right? Because gold in a vault can't be seized or sanctioned. And increasingly, some of the global South nations are using gold as a settlement vehicle instead of dollars. Wow. Because, so if Brazil and China do, $100 billion worth of trade, and one spends 90 billion with the other, well, there's 10 billion left over. How do you settle that? Right? If they're not going to use dollars, they've got to use something else. So sometimes it's yuan and sometimes it's gold.
Wow. I got to tell you, Dana, I am so grateful for you. First of all, that we met. I just think you're just a wonderful human being. But, the education that you gave us today is just immeasurable. And it's one of those things, people, where, they always talk about, if you have a financial planner, if you have anybody that you work with when it comes to your money, they always talk about diversification, right? Diversifying your portfolio. And no doubt about it, this is an amazing way to do that. And a lot of people don't know about it, but Dana, you just gave us a great education about gold and silver. And this is what I really, really wanted the people to hear, because we've been hearing so much about it, but I've had people call me going, Coach, what is this all about? Right. And I'm like, I got to get Dana on here. We didn't have him explain it. Right. He's just, no, it really means a lot, buddy. And I thank you for that. And American Gold Exchange, these are your guys. They're amazing people. They're educational. They'll help you. They'll walk you through the process. Heck, they'll deliver it right to your door. And it truly is that easy to get involved in this. Rick, do you have any questions for Dana? I've seen you write notes. Do you have anything you want to talk about?
Yeah, I just had one real quick question, Dana, and that is, with all the different coins you mentioned, Australia, Austria, Britain, Canada, is there any value difference between one or the other, or is it literally just weight and mint?
Well, that's a great question. So just to explain it to you briefly, the U.S. Mint makes 1 ounce gold and silver coins. The Canadian Mint and the Austrian Mint do as well. Now, if they were ice cream, I'd call them vanilla, chocolate, and strawberry. Those are your 3 most popular mints. However, the U.S. Mint is a little bit less efficient in the manufacturing process than Canada or Austria are. So the premiums that we pay as dealers are a little bit higher for that same ounce from the U.S. Mint than they are from the Austrian or the Canadian Mint. Number one. Number two, the U.S. products are the most popular in the U.S., right? So there we have the most vibrant market, but they're all vibrant markets. But what happens is when we get a demand rush, like we've gone through, the U.S. Mint, because they're not quite as efficient, can't keep pace with demand as well. So there are times when we can see premiums for the U.S. gold and silver eagles rise inordinately compared to the Canadian or the Austrian. And that's when our expertise really helps our clients or whoever wants to to do business, because we'll tell you, look, if you're going to pay extra for a gold and silver eagle the U.S. Mint makes right now, you may not get all that premium back in the future when things settle down. So why don't you pick one of these other ones that are just as good, where your money will go a little bit further and you don't have that premium exposure, right? And I've actually helped clients, who had gold eagles when the premium got inordinately high, trade those gold eagles for Canadian maple leafs and get free ounces of gold in the process and harvest that premium, where other dealers are saying you got to buy these because they're so hot right now, the premium's going to go higher. Well, they're like Doritos. Eat all you want, they'll make more, right? So when we get into a demand squeeze, that's why having a dealer who's in your court will help you understand what's what is a good value for you. But they're all about this. They're pretty close to the same, but the U.S. Mint's just a hair more expensive than the other two when things are normal.
Great question, Rick. Thank you for that. And great answer, Dana. Hey, Dana, how do people follow you? I know you have a YouTube following, a social media following. What's the best way for people just to learn more about Dana and American Gold Exchange?
So our website is amergold.com. We focus on the most widely traded, competitively priced, and more importantly, easily sellable for you products. I mean, there's all kinds of, you can get a silver skull, you can get a cube of gold, who cares, right? These are commodities. You want to have the efficiently traded and priced commodities. So we focus on those. So our website is amergold.com. We have live, online, transparent pricing. Email is info, I-N-F-O, at amergold, amergold.com. I have a YouTube channel, American Gold Exchange, Austin, which is where I put frequent market updates to, tell about what's happening in the market right now. Why did gold go up this week? Why did silver go down? What's impacting these? Gold and silver are just rocks, right? So they have to be impacted by external forces, economics, inverse correlation to the dollar, treasury yields, geopolitical tension, whatever. So look for our YouTube channel, American Gold Exchange. And we're on X and we're on LinkedIn, both as American Gold Exchange, and I have personal accounts as well under Dana Samuelson. You can find me pretty easily. That's where we do posting of charts and comments and things in between our video updates. So we try and keep people informed as things change. And we try and do so with a rational, sane, or a reliable outlook. And there's a lot of hype in our sphere and about a lot of half-truths. And I want to have people have integrity, receive the message that I give with integrity and trust what I'm trying to tell you is what I believe is true. Where some people will tell you half the argument that benefits them just selling more of this metal to you. I want you to understand both sides of the equation.
3-5.
I remember the first time meeting Dana, and I just got to tell this story. Dana's going to laugh. But I remember him hopping in a friend's car, and we were all going out to dinner. And I was super excited about a gentleman by the name of Robert Kiyosaki coming to this dinner. But Dana jumps in the back of the car, and as I'm getting to learn more and meet Dana, I'm realizing, oh my God, I am going to be sitting at a private dinner with Robert Kiyosaki and Dana Samuelson. And I'm like, how can I was pinching myself in the seat, just going, I can't believe I'm going to be with these two gentlemen. And the education I got at that dinner, and now to be able to call you friend, Dana, is truly an honor, buddy. And I thank you for this. I called him a couple of weeks ago, and I just said, Dana, I got to have you on. I got to introduce you to my friends and how you give them an education. And I know you're a busy man, and I just can't thank you enough, Dana. I can't. It's an honor to have you on Unplugged. And we are going to put all your information on this podcast so people could learn how to invest, how to follow you, all of that stuff. And God bless you, Dana. Thank you so much for what you do for America and our citizens. And you are a true patriot, buddy. God bless you, buddy.
Well, thank you, Mark. That goes both ways. You're a man of integrity and honor, and what you've done with the Honor Bowl is just incredible. And it's my pleasure to know you as well. So don't discount the value you bring, sir. And I truly appreciate our friendship and having gotten to know you over the time. And yeah, that was a fun dinner we had with Robert that night.
That was a fun dinner.
He's a legend.
Dinner. He's a legend. Yep. God bless you, buddy. Really appreciate it. And thank you very much for this episode of Unplugged. Next week, you're going to be learning about tiny homes. We got the premier guy that builds tiny homes. He's going to be on, and we're going to be talking about tiny homes because I just built one for my mom. So you're going to be learning about that. This is Coach Soto Unplugged out.